Welcome to part 2 of this online presentation of Financial Statements Made Easy, presented by the Small Business Development Center at Columbia Gorge Community College. This portion of the presentation will introduce you to the income statement and help you understand the basic format of this important financial statement. Again, this presentation is one portion of our Financial Statements Made Easy course, so please visit the Columbia Gorge Community College website for information on enrolling in the entire program. This website will be provided later in the presentation. The income statement is sometimes also referred to as a profit and loss or P&L. Unlike the balance sheet, which was a snapshot view of the business, the income statement measures performance over a period of time and will have a start date and an end date. This time period could be anything from daily, monthly, quarterly, semi-annually, or annually. The end result of the income statement is a calculation of the net profit or loss of a business after all expenses are deducted from the revenue the business earns. This is typically the most popular financial statement amongst business owners, but not necessarily the most popular with the financial community. As we learned in part 1, the balance sheet often receives more attention from a potential lender. However, in reality, both financial statements are very important to the success of a business, and this will be demonstrated further in the third part of this course. Let's take a quick look at the basic components of the income statement. Sales are what is earned from conducting business activities. You may also see sales referred to as revenues. Either term is fine, and both represent the incoming revenue a business receives as a result of offering their goods or services. The cost of goods sold is the cost incurred to have items available for sale. This may include material cost or the direct labor necessary to produce a product to have it available for sale to your customers. The total revenue or sales earned from selling your product or service minus the cost of goods sold represents your gross profit. Let's look at an example of how this could work in a business. Let's say that you own a business selling television sets, and you sell a television for $500. This $500 would represent your sales figure on the income statement. You probably had to buy this television from a supplier so you could have it available for sale. If your cost to buy this television from the supplier is $300, this would represent your cost of goods sold. Sales minus cost of goods sold in this example would give us a gross profit of $200. To complete the income statement, we could then deduct all expenses, which are the costs incurred when conducting business. These could include several items such as payroll expenses, depreciation, utility expenses, rent, or business-related travel. Subtracting expenses from gross profit results in the net income or loss of a business, which is what is left in the end. You may remember from the balance sheet presentation that this final number is contained in the equity section of the balance sheet. This is a sample income statement where we can see each of the areas we have discussed previously. Starting with sales, we can see that this business has shown some of the different sources of revenue within the company. In your business, you will want to be able to see the sales generated from each product line or service that you offer. All sales are totaled here. Here we see the cost of goods sold, and when this is deducted from our total sales, we can calculate the gross profit of the business. The next section of the income statement shows us some of the expenses that may be incurred when operating a business. Tracking expenses is important for ensuring your income statement is accurate. Expenses are totaled here, and when deducted from our gross profit, we are left with the net income of the business. In this example, the net income is positive, but if the expenses would have exceeded the gross profit, this company would show a loss. This concludes this online presentation. Please visit this website to learn more about enrolling in this and additional courses. If you are a student viewing this presentation, please continue with the remainder of the online class, and as always, if you have any additional questions or comments, please post them in the questions forum.